Let's look at Ripple. Is it a buy or a sell? First off, read this disclaimer carefully. And do your good deed of today by liking and subscribing. So here we have the pair. Still 112% from the 52-week low, but we do have that astonishing minus 60% bear market. Here is the company's website. Easily move money to all corners of the world. Discover why hundreds of financial institutions choose RippleNet to provide a better payment experience and enable greater economic opportunity for everyone, everywhere. So let's jump into the charts. Okay, so here you can see that we do have that interesting pattern that's been developing for quite some time, and that is this pretty substantial cup and handle pattern. That is a bullish technical pattern, so that's 1 point for the bulls. If we look here at the most recent developments, you can also argue that we have something that looks like time cycles. So let's see how reliable the time cycles have been. There's been some reliability to the time cycles, suggesting that we are part of a rising phase at the moment. So one of the issues I see here, that is definitively this purple 20-week moving average. So let's just draw that one in. So here, obviously, it's creating some problems here for the bulls. Back here, it was also resistance. Back here as well, pretty surgical resistance. But the caveat with that moving average is that it also has a pretty good history of offering support. So it is a super key moving average moving forward. It is currently resistance though, so it's a level where the bears are likely to add to short positions. But if we are able to get above it, then there's very good reason to think that it will be beneficial in the future as well. When we go here to the daily data points, and then we see that the key, super key moving average, almost ridiculously surgical. Blue 100-day moving average is the name of the game. Major, key, super surgical resistance level. So if you are a short seller, this is definitively a place where you put in your shorts in the same way that a bull is going to put on long positions when the 100-day moving average is acting as a support. But definitively the bears have a decent situation here with that moving average, but there is a but, because we do have a technical pattern in development that could be quite beneficial for the bulls. So let's get a bit bigger here. We do have what looks a lot like a potential inverse head and shoulders pattern in development, and for all intents and purposes that is a bullish pattern. Let's look at these other indicators here. Let's do it like this. Yeah, so we see that in terms of RSI and the PPOs, we are basically in the neutral zone. Looking at the MACD, we recently have seen a pretty substantial pullback. Daily data points. Yeah, it is interesting to see that the RSI, it has a tendency to use the entire range, oversold, overbought, oversold, overbought. So it is very, very, attractive for swing traders for sure. Yeah, basically I think we need to get additional data here in order to make a decision. But in terms of the line in the sand, what is the main event? I think that we could say that 100 DMA resistance. So that is like the key event at the moment. So the bears are they are in control. Okay. As far as the long-term radar goes, I think that we could say a cup and handle, and then weekly data points. And then we do have the inverse H and S on the dailies. Okay, that is a bit more longer term, but those are the key events. In terms of the technicals, to give it a rating, I think that this one, it is a bit mixed, given that we do have, yes, we have resistance, but we also have the potential inverse head and shoulders pattern. I think I will give this one just modestly to the bears. So let's give it a -3. Next, we will look at seasonality. Okay, so here we have the seasonality for Ripple. So here to the right, average over the last 5, 7, and 10 years. So we do see that the seasonality is actually rather bearish here, heading towards the 19-ish of March, so late part of March. That is where the seasonality usually bottoms out, and then the bulls have a good going leading up until early April. Okay, looking here to the left, we do see that over the last 5 years, March is very weak. April is super strong, but May and June are bad. Over the last 8 years, then we see that February, the current month, is very 50-50. March only closes higher 29% of the time, but on average there is a decent gain. April, very strong, but then May and June are a bit more problematic, because one thing is of course the percentage. So as an example, if we take May, so it closes higher 43% of the time, notwithstanding that the average gain is 66%. So you need to look at both numbers. And when we look here to the right, we see that even though April has a tendency to be very strong, we see here that the strength of April usually happens very early, and then there's a tendency for it to actually weaken here later into that month. So April is very strong. The problem for us is that we are currently in February, specifically the 18th of February. Hence, it doesn't really make sense to give the bulls the seasonality, because that April is not now. So the most relevant seasonality for us at this moment is unfortunately more bearish. So I will give this one to the bears, not in like a major way, but I will give them a -4 here to their benefit. April is, however, very good for the bulls, and it is very possible that leading up to April, like when we are approaching March, you could see some developments that favor the bulls, simply because you do have people who just want to position themselves ahead of that very strong seasonality. So those who are massively short are very likely to start, tightening their stops, which in turn increases the probability that their stops will be triggered and they have to cover. Okay. Yeah. The next item on the list is fundamentals. I don't really think there's much to look at in terms of the fundamentals here for Ripple. It is true that in the very design of these cryptocurrencies, Bitcoin, you name it, they are sort of supposed to have their own, fundamentals. But I think that, the chart really clearly shows that they have been completely disconnected from that. So yeah, I will just jump here to relative performance. Okay, so here are the correlations. So we do see that there's a 81% correlation with the S&P 500. So yeah, that's very strong. So this idea that, cryptos are disconnected from risk assets, that's not true. There's an 85% correlation with Bitcoin, 29% with gold, and -50 with the dollar index. Daily data points: 9% with the S&P 500, 90% with Bitcoin, and 15% negative with gold, and then we have -60 with the dollar index. So looking long term and short term, it is pretty clear that the strongest correlation here is with Bitcoin. So let's do a quick technical analysis of Bitcoin, like that, and then we go to the daily data points, and let's get the Bitcoin index, like that. So here we have the Bitcoin, and we did see that we have these 3 weeks here in a row of rally. That was good, but the pullback we have seen is not really a huge shock. When we look here at these other indicators, yeah, we are still at pretty low level here. So there's not like we are certainly not overbought by any stretch of the imagination. In terms of the daily data points here, we did see that we formed a bit of a double top here on the RSI simultaneously as we did it with price. So that was a bit of an omen in terms of in regard to how committed the bulls were to this rally. We did see that we pulled back to the 50-day moving average multiple times. Did eventually find support, but then we see a very ugly break, very ugly actually. Because in terms of Bitcoin, we don't really have that inverse head and shoulders pattern. So we have this, but then the right shoulder here is significantly below the left, and that is not what you want to see. We have also here, if we can draw that in, so let's go a bit bigger screen here on the chart. So I can show you that we have actually broken a very, very, very important level. So you see that low back here, that is horizontal support. We have now gotten below that, and that is not what you want to see. Yeah, this is that's not good. Bitcoin, let's look at Bitcoin. Bitcoin slash. So here I am looking at Bitcoin against the US dollar, looking at it in turn against Ripple slash the US dollar. So this is in order to look at to figure out whether we have outperformance, underperformance, or just flat. We see that Bitcoin has overall been strengthening here against Ripple. So we do see outperformance overall. Interestingly, we do see that there are these pretty clear time cycles in terms of this relationship between Bitcoin and Ripple. We are still part of that. We recently had this declining phase. We are supposed to have a rising phase here. The previous time cycles have been, rather clean-ish. So that's a bit interesting. Let's see what the seasonality suggests here. Will it corroborate the time cycles? Well, let's figure that out. Yeah, so the seasonality here does actually corroborate the time cycles. So the seasonality suggests that we will see Bitcoin strengthen. Well, it has a tendency to strengthen heading towards early March here. So yeah, that does frankly corroborate the time cycle. And now I am looking at I think, or maybe should I do Ripple? I think I will do Bitcoin in this case. Simply because what happens to Bitcoin due to the strong correlation with Ripple, it's just going to have a big effect on Ripple. Okay, so here is Bitcoin against the S&P 500. So let's get a bit more nuanced picture here with the daily data points. So when we look here at Bitcoin against the S&P 500, then we do actually have a bit more of a inverse head and shoulders pattern still in play. Let's draw it in a bit more nicely. Shoulder, head, and potentially we are forming a right shoulder. So the right shoulder, if it develops at these levels, then it will be higher than the left shoulder, and that is a functional inverse head and shoulders pattern. You also see here that the head of the potential inverse head and shoulders pattern was formed through a double bottom. So that is initially a bit interesting, a bit tepidly bullish. When we look at the seasonality, supposed to be some decent seasonality here in favor of Bitcoin heading towards mid-March. So that's interesting. Here we are looking at Bitcoin against gold. So let's go here also to the daily data points. So in this case, you see that the inverse head and shoulders pattern has just broken, and we do see like an ugly break here, frankly. So this inverse head and shoulders doesn't exist anymore. So gold is definitively strengthening here vis-a-vis Bitcoin. And looking at the seasonality here, So there usually is some weakness in gold heading towards, later February, and then it's that is, Bitcoin has a tendency to weaken against gold here heading towards the February. Then we see some strengthening of Bitcoin heading towards early March. Yeah, so that's relevant. And finally, I'm looking at Bitcoin against the dollar index. So let's, here again, just jump right into the daily data points. And we do see that, yeah, here as well, we did have that inverse head and shoulders pattern in development, but the right shoulder here is significantly below the lows of the left shoulder. And that is, that means that more or less the inverse head and shoulders pattern is broken. Yeah. Okay, when we look here at the seasonality, there's a tendency for Bitcoin here to weaken towards 23rd-ish of February against the dollar, and then it tends to strengthen here heading towards early March. So in terms of relative performance, I think one of the biggest issues in terms of all the pairs we looked at is that Bitcoin, which is the king of the cryptos, it has weakened very substantially against gold. And the situation we currently have in Canada, where there's been this massive crackdown on cryptocurrencies related to the whole trucker protests, I think it also showed the crypto community that there are major weaknesses in cryptos, because one of the ideas is that cryptocurrencies was this completely anti-fragile currency. The problem is that the vast majority of people who use cryptos, they use them to get more fiat currency purchasing power. So we do not have like an Amazon for cryptos or other parallel economies, e-commerce platforms that are purely based on cryptos, which means that the banks, the fiat currency banks, they are in charge. So even if you have tons of cryptocurrencies, if the banks, get a letter that your Bitcoin wallet, that they are not allowed to do any transactions regarding your Bitcoin wallet or your Ripple wallet, then they won't. And then you are stuck there with cryptos that you simply cannot use, because the community has not created an Amazon for cryptos, a Walmart for cryptos, or anything like that. So yeah, I think that it's become very clear now that the only really anti-fragile currency out there outside, that functions, outside of the fiat monetary system, is actually gold and silver. So I will give this one a bit harshly, actually, in favor of the bears. I think that what we have learned this week is actually very dramatic for cryptocurrencies. They can still recover, but recover in terms of like the legitimacy of the grand ideas behind the cryptos. But I think the window of opportunity is really closing. It has been closing for a long time, and I've talked to a bunch of people in the crypto community about the need to focus more on transactions. Instead of being hung up on the price of the cryptos, focus more on transactions. That is the only thing that could make it anti-fragile. If cryptos is something that you must use on certain platforms, and where you don't even have the option of using fiat money, but that hasn't happened. So yeah, to sum up, we do have a minus 4.3 here, which means that I'm feeling more bearish here than bullish. There were bullish points, I have mentioned it. I think the key thing here about the bearish thesis is definitively that 100 daily moving average resistance. As long as it holds as resistance and the bulls are not able to use it as support, then I would stick with the bearish take.